Commercial real estate investing. Understanding base rent. If you are investing in commercial real estate, it is imperative that you understand the key financial and legal aspects associated with implementing your investment strategy. As you are looking to optimize your investment return, it is important that key financial aspects are not overlooked, but instead the business arrangements that you agree to are directed at securing the optimal profit return and protecting or otherwise limiting against potential legal issues. For purposes of leasing your commercial real estate investment, it is important to understand base rent as it relates to a net lease arrangement, and in particular a triple net lease, such that you might apply this knowledge to your own investment strategy. Base rent is a set rental payments that a commercial tenant must pay to the landlord for leasing commercial real estate, as distinct from variable rental payments such as additional rent and percentage rent. Base rent is established at the outset of the lease term and its renewal, with it being quite common for the base rent to escalate during the lease term and its renewal. The calculation of base rent typically involves multiplying the square footage of the lease space by the agreed upon rental rate per square foot. For example, if the base rent is $20 per square foot and the lease space is 1,500 square feet, the base rent would be $30,000. That is $20 per square foot multiplied by 1,500 square feet, resulting in monthly base rent payments of $2,500. The escalation of base rent over the course of the lease term might proceed by way of a step escalation, such that base rent might commence at $20 per square foot for the initial 4 years of the lease term, increasing to $22 per square foot for the next 4 years of the lease term, and a further increase to $24 per square foot for the final 2 years of the lease term. Although many commercial lease agreements provide for a fixed base rent for the lease term, with prescribed step escalations in base rent at set times during the course of the lease term, there are commercial lease agreements that allow for adjustments to the base rent at specified intervals to take into account actual inflation, market value, etc. If the base rent is subject to adjustment at specified times during the course of the lease term, it is important to understand the methodology for calculating those adjustments to base rent, be it Statistics Canada Cost of Living Adjustment, Consumer Price Index, fair market rental value, arbitration, etc. Base rent, together with its escalation over the course of the lease term, together with other rental payments such as additional rent and percentage rent, if applicable, must be properly scrutinized prior to entering into a commercial lease agreement such that it is appropriately budgeted. Investing in commercial real estate demands a solid knowledge of the financial and legal particulars of the business arrangements that you are looking to undertake after acquiring the commercial property. The profitability of a particular commercial real estate investment is measured by the profit margin that can be realized, together with the avoidance of legal liability and financial setbacks. For experienced legal counsel with respect to the leasing of commercial properties and related legal and financial matters, contact our law firm today. Thank you.